Alright, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the global market analyst here at Markets.com. So, ladies and gentlemen, today is Friday. I'm recording this one on Friday, the 2nd of May, and we have a special day, of course. It's the not only is the first Friday of the month of May, but also we have the NFPs. Look, this whole week we were getting jobs data from the US, and yeah, they were all over the place. A little bit more, more of it to the downside, to be honest. But all eyes now are on the NFP, and let's see how we can play this game today. Before I go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Just a quick mentioning of our Markets.com website, which you can also check us out here. You can check out. If you have any questions, reach out to us. We'll be more than happy to assist. Now, ladies and gentlemen, the first one on the first chart that I have here on my screen is the AUDUSD, and I'm loving the technical setup right now because again, after breaking this little short-term downside resistance line taken from the high of the 21st of February, we now kind of stalled, and now we're oscillating around my 200-day EMA on the daily chart. This 200-day EMA is shown as the white line, so you can see that, yeah, we're currently kind of moving sideways. I do have the Fibonacci retracement here just in case, but I will remove that Fibonacci retracement if we do pop above the 0.6450 territory right there. We're seeing some weakness in the Australian dollar against the US dollar, but yeah, the DXY right now is on the positive side, somewhat on the positive side. I would say yes, we're a little bit of a decline here, but Australian dollar is feeling the heat, given that the stock market is worried still, and yeah, we're struggling, and commodities are falling, especially gold, oil, and yes, a currency like Australian dollar or New Zealand dollar, which are commodity linked currencies. Those are not loving the moment. So the US dollar, we're seeing, yes, this is, by the way, the daily chart. So yes, we're seeing a little bit of a correction back down, and this is how I'm treating this one right now. But all eyes are on the US NFPs today. And coming back to the AUD/USD situation, look, you can see that despite the US dollar correction lower, Australian dollar is let's say on the weaker side. So, but again, we're not in any rush at this point. Yes, it looks a little bit more promising for the bulls, in my opinion. However, as I keep on saying, wait for a confirmation break. And at this point, 0.6450 is the one that I'm watching very carefully. So, what do we have today? Today we have the US job numbers, and especially the non-farm payroll. This whole week we had other job numbers from the US, like for example the JOLTS job openings, which came as a huge disappointment in my opinion. Wednesday we had the ADP figure, which also did not really sparkle well. And look at this. I mean, it's like double the, or more than double the in the previous figure, and it, not to mention that, yeah, it fell below the forecast as well. So now everybody's thinking that NFPs might come out on the lower side, just maybe basically due to JOLTS on the lower side, ADP on the lower side. But many times I said before that, look, do not try to gauge those numbers with the NFP, because again, the correlation is not there, and sometimes it does happen that they're all coming out the same way. But do not do that. You might get a surprise, and it might be ugly, and you were thinking one way, and then it comes out the other way. So if we, for example, come out somewhere above the forecast here on the NFP number, but still below the previous figure, in my opinion, that we could see the dollar rallying, and we could see maybe the positivity kicking into the U.S. market, because yes, it's lower than the previous. However, it still is, it's a good number. It's a decent. It's higher than the forecast. Now, of course, somebody might say, but hey, maybe the forecast was way too low. I would say it's kind of in line. It's all okay. It's fine. It's not really something crazy here to be around 130K. So, like I said, it's all okay. But yeah, if it comes out higher than the 130, like I said, the market could react positively, and in a way, we could see AUDUSD, for example, drifting back to the downside here. Because at the moment, yes, weakness in the US dollar kind of helping this pair to move a little bit more to the upside, and some positivity that we're seeing in the stock market as well. That's what's fueling this rally, probably. Gold is kind of trying to push back up as well. So, like I said, all at the moment is kind of in favor, of this pair going higher. However, like I said, if we do see the U.S. numbers coming out a little bit on the bear side, maybe this is gonna stall. Maybe this is gonna just end up being in some sort of like a little range pattern, and will continue oscillating around the 200-day EMA. So again, like I said, I'm not in a rush in any way. I'm watching the numbers carefully, and yeah, if it's in favor of DXY, then the U.S. dollar index could pump back up here. Look, with the DXY, what I said before, that from the technical perspective, and if you were watching my webinars in my live sessions on Monday, Wednesday, and Friday, I talked about this from Monday. I said that, look, I'm going to aim for some higher areas here, and but my initial target will be this upside support line taken from the low, or should I say the lowest point of July of 2023, and I'm going to aim for that one from to test it from underneath. Now, it could provide good resistance, and it did. And if it provides good resistance, another decline here could be possible. So far, so good. But we're now testing the so-called neckline of this little inverted head and shoulders pattern. So basically, there is still room for a possible reversal back up. But my personal preference, is to wait for a push above this upside line, in order to get a little bit more comfortable with a larger correction to the upside. Because don't forget that overall we're below this downside line. Now, if you got confused here a little bit, I do understand. It could be a little bit confusing. However, there's a lot of ifs, and I'm trying to cover all these ifs and to see if we can get this one right. So if you are, like I said, trading something US dollar related, then be careful today. Keep an eye on the NFPs. So if there is some positive news on the for the dollar, then we could see a beautiful reversal back up here. Maybe going, like I said, back to this upside line. And if that upside line gets surrenders, then this opens the door to some higher areas for the DXY. In terms of other pairs, in terms of other US dollar pairs, so for example USDJPY, we're seeing a nice little retracement here back down. But let's not forget that we had the BOJ interest rate decision this week, and basically that didn't really work well with didn't work well for the Japanese yen, because again the Bank of Japan did not do anything. They kept the rate unchanged at plus 0.5%. So that's why we could still see some negativity here kicking into the Japanese yen against the US dollar, and we could see USDJPY traveling nicely to the upside. However, let's not forget that we're still below this downside line taken from the high of the 10th of January and of this year. So any kind of move up until this line could be classed as a temporary correction before another possible leg of selling. So keep that in mind. But if you're really eager to aim for some higher areas on this one, then wait for a break of this downside line. US dollar against the Canadian dollar, we're also at a very interesting spot here. Look, this is one of my favorite formations here, and whenever we have a strong decline like this and then a gradual decline, then I'm kind of leaning, towards the upside a little bit, but I have to say that a break of the upper side here of this falling channel where we currently are in is required. So we need to see a clearance of this upper side of the falling channel, and then we could, get a little bit more comfortable with a larger correction to the upside. Euro USD, for example, is doing a nice reversal back up right now. Of course, fueled mainly maybe by the weakening of the DXY. However, keep your eyes on the data. We could still see, some maybe weakness here if the, like I said, if the US dollar does pick up pace, and we could see a nice reversal here to the downside towards this little short-term upside line taken from the low the 28th of February, and then we'll see from there. If we can find good support, we'll rebound. If we don't see support here near this upside line, then I would say that be careful here. And we could see, like a break here maybe and move lower. But look, let's not get there yet. First, let's see what's going to happen here today. Are we going to get like a nice push back up towards the 1.15 zone, or actually is this going to test this upside line? So keep your eye from the very short-term perspective. I think that keep your eyes on the 1.1263 territory right here. A nice good drop below this could lead to a test of this little upside line here. And then we'll go from there. So, and in regards to the indices, very quickly, so yes, we're near the Dow Jones Industrial Average. As you can see, we're near key resistance. This week on Monday, I said that if we break this downside line, I'll go for the 50-day EMA here, and I'll go for this downside line. We tested that perfectly. That's great, good result. Now the question is, can we break above this downside line? So, like I said, if the numbers come out not bad, then we could see Dow Jones here also rallying nicely, but well, rallying for me at the moment. What I'm examining here on the upside is if we do clear this downside line, this one right there, taken from the high of the 20th of February. If we do clear this downside line and we clear the 50-day EMA, I'm only aiming for the 200 and then 100-day EMAs shown as the white and blue lines respectively. And then we'll go from there. So, ladies and gentlemen, that's it for this little quick update. I just wanted to share with you my thoughts on the NFP today. So, let me know in the comments what you think, if you like what I said or not, or you agree with what I said or not. And yeah, we'll go from there. Thank you very much. As always, stay safe, have your stop losses in place, risk only what you can afford to lose. Don't overtrade, and everything will be fine. I'll see you later in my next video update. Bye for now.